Hello, everyone. Let's talk about the drama queen of the stock market world, volatility. What is it? Why does everyone panic when they hear the word? And why is it actually your secret investing weapon when you understand it? Let's break it down in simple, smart language. What is volatility really? Volatility is just a fancy way of saying how wild are the price changes in a stock or market. If a stock is calm, slow, and steady, that's low volatility. If it's jumping up, crashing down, giving you financial whiplash, that's high volatility. It's like the market's mood swings calm one day, chaos the next. How do we measure it? We actually measure volatility with numbers called standard deviation or indices like the VIX. But don't stress about the math. Just know the bigger the swings in price, the higher the volatility. Example, a stock that moves 2 euros a day has low volatility, but a stock that jumps 20 euros a day is high volatility. Okay, so let's answer the real question. Why should you care about volatility at all? Why does this market mood swing word keep popping up in every financial conversation ever? Firstly, volatility shows you the risk level. High volatility means a stock or market can swing wildly up or down. If you want to double your money fast, you're probably in volatile territory. But if you can't sleep at night because your portfolio moves 5% in a day, maybe you want lower volatility, which is safer, steadier investments. It also helps you pick your strategy. If you are a slow and steady wealth builder, you should stick to low volatility, big cap stocks, and index funds. Are you a fast action trader or crypto gambler, you'll chase volatility because that's where the big quick wins and big risks live. Knowing volatility helps you stay in your own lane and not panic when the market acts crazy. Thirdly, it also affects your returns over time. High volatile stocks can bring huge returns or huge losses. Lower volatility stocks usually grow slower, but with way fewer heart attacks along the way. No matter which you pick, volatility literally shapes how fast your money can grow. And fourthly, it also reveals opportunity. When markets drop suddenly, like they did in 2020, that was volatility. And the people who understood volatility, they bought low and sold later for big profits. Volatility is the market going on sale, but only the prepared can shop smart. What you should also know is that it protects you from bad decisions. If you understand volatility, you won't sell in fear during a dip. You'll know that, hey, this is normal. Chill, stay invested. This is the mindset that builds long term wealth, not panic selling when the market sneezes. So, why does volatility matter? It matters because it's always there, like gravity, like weather. Volatility is part of the market's natural life. If you ignore it, you get surprised. If you understand it, you stay calm, confident, and you make smarter money moves. So, to recap, volatility doesn't have to scare you. It can be your secret investing weapon if you learn to read it right. So, what's your investment vibe when it comes to volatility? Think of the stock market like dating. Actually, there are different types, and knowing what you're into will save you drama and stress. The chill, long term investor vibe. You love stability, you're not here for fast thrills, you're here to build slow, steady wealth. You invest in solid big companies like Apple, Microsoft, index funds, things that don't make you chase your phone every 5 minutes. Volatility is not your thing. You want peaceful, predictable growth. You're in it for the long game, retirement, generational wealth, that quiet confidence. The high risk, high reward vibe is when you get a little rush from market swings, crypto, penny stocks, startups. You're curious, maybe even obsessed. You like the possibility of high gains, and you're okay with big drops because you believe you'll win long term. And volatility, you ride it like a pro surfer. Wild waves, but exciting opportunities. And then, what you should always remember is that you should always diversify. Don't rely on just one drama queen. You can also be the balanced it girl vibe. You can have a little risk, but not too much drama, some solid investments for safety like index funds, but also some spicy picks like tech startups, growth stocks for potential big wins. So you should always ask yourself, what vibe are you? And here's the best part. There's no right or wrong vibe. The key is knowing yourself, knowing your own risk comfort, and volatility at the end of the day only feels scary when you don't match it to your personality and goals. Quick recap. So, what is volatility? Volatility are basically market mood swings. They go up and down and they are unpredictable. You need to know your comfort level. Are you calm and steady or thrill seeking? And your vibe shapes your strategy. If you're looking for long term slow growth or short term big bets, you need to see for yourself what suits you best. And also remember, there's no shame in having your own vibe. but you should definitely make sure that it matches your investments and that it matches your values and goals as well. And the last thing to remember is that volatility isn't good or bad, it's power. You should know how to use it, and you're ahead of 90% of casual investors. Thank you for watching this video, and if you found this helpful, hit like, subscribe, and share with your besties who need to hear this. This is the Pink Portfolio, Finance with Finesse, where we turn money talk into your new favorite accessory. Catch you in the next one. Bye.